All right, welcome to this explainer where we are diving headfirst into the absolute storm of Netflix headlines we've been seeing lately. Seriously, if you've been following Netflix at all over the last few weeks, you know it has been anything but boring. I mean, we're talking about a billionaire hedge fund manager making a dramatic return to the stock, a staggering $105 million lawsuit over a stolen Nicolas Cage movie, a massive global outage, and a $500 million bet on AI that is actively reshaping the whole entertainment landscape. So, the big question we need to answer today is this: is Netflix a company on the ropes, or are they a visionary powerhouse quietly writing a very, very clever next chapter? Let's get into it.
To make sense of all this chaos, we're going to organize these data points into 5 quick themes: the financial roller coaster, a $587 million AI bet, doubling down on India, lawsuits, outages, and hiccups, and finally, the battle for growth.
Okay, kicking things off with Section 1, the financial roller coaster.
So, over the past 12 months, the stock has suffered a dramatic 40% correction. It tumbled from a June 2025 high of $134 all the way down to $67 by mid-June. That is a brutal 50% haircut from its peak. And for a lot of casual investors, seeing a massive negative number like that flashing red on their screens, it immediately signals a deep structural crisis.
But here's what's really interesting. Look at how razor-thin their Q2 revenue miss actually was. They reported $12.56 billion against an estimate of $12.59 billion. I mean, come on, that is literally a rounding error. Yet, as we know, a miss is a miss on Wall Street. But that actually wasn't the whole story. The real panic set in because of weak third-quarter guidance. They were forecasting just 12% growth, and they announced they're reducing their engagement reports from twice a year to just once. Analysts immediately freaked out, worrying Netflix was trying to hide slowing engagement, and that whole combination, it sent shares sinking more than 10% in July alone.
But here is the plot twist. In a massive vote of confidence, billionaire Bill Ackman's Pershing Square just swooped in and bought 3.15 million shares. Now, if you remember, Ackman sold his Netflix stake at a $400 million loss back in 2022. So why on earth is he back? Well, because he believes Netflix has, quote, effectively won the streaming wars. He's looking at a subscriber base that is nearly double the combined total of Disney Plus and HBO Max, and he's calling the current beaten-down valuation a substantial discount. He bought in right at that mid-June bottom.
And honestly, Ackman's bullish stance really starts to make sense when you look at the explosive momentum of their ad-supported tier. Their ad revenue is expected to double to $3 billion this year. $3 billion! So while Wall Street is hyper-focusing on, a fractional revenue miss and shifting engagement reports, the long-term players are seeing this wildly successful new revenue stream cementing its place in the market. Moving right along to Section 2, a $587 million AI bet.
Co-CEO Ted Sarandos recently dropped a jaw-dropping statistic. Netflix is already heavily integrating artificial intelligence across over 300 productions. But, and he was very quick to clarify this isn't about replacing human talent like the writers or actors. Instead, it's about enabling bigger, better stories. They're using AI for pre-visualization to safely map out really complicated, dangerous shots, and for enhancing post-production. For example, in the historical series The American Experiment, they used AI to safely and seamlessly recreate 17 minutes of intense historical battles. They're also heavily using it in international projects, like the Indian thriller Glory and the Brazilian documentary Brazil 70.
To supercharge this whole effort, Netflix just opened its wallet in a massive way. In August, they spent a staggering $587 million to acquire InterPositive, which, fun fact, is an AI startup founded by Ben Affleck. I mean, think about that. That is over $500 million dropped on a single piece of technological infrastructure. And this right here brilliantly illustrates exactly why they made that purchase. AI has the potential to entirely eliminate the need for costly physical reshoots. In traditional filmmaking, nearly 20% of a movie's entire budget is eaten up by pickups and reshoots, literally calling the cast and crew all the way back to the set just to fix a flawed scene. Netflix is betting that their new AI infrastructure can seamlessly recreate those missing elements digitally. We're talking about saving hundreds of millions of dollars across their production slate while actually improving the final product. It's a total game changer. Which brings us to Section 3, doubling down on India.
So, on August 5th, Ted Sarandos met with Indian Prime Minister Narendra Modi to announce the Netflix India Storytelling Initiative. This is a massive, multi-phase investment in India's creative and technical talent pipeline.
They're co-developing an industry-ready VFX curriculum, they're handing out 100 scholarships for Indian students, and crucially, they're building a whole talent pipeline for accessibility roles like audio description writers and voiceover artists. They are literally investing in the infrastructure of Indian storytelling from the ground up.
And this strategic partnership is absolutely vital for them. Over the past decade alone, Netflix has created over 200 Indian originals across more than 100 locations. India is already one of the world's fastest-growing streaming markets. But beyond just sheer market size, Sarandos pointed out something fascinating. Indian creators are currently embracing AI tools faster and more aggressively than anyone else in the global industry. So by building their talent pipeline there, Netflix is perfectly positioning itself right at the intersection of geographical growth and rapid technological adoption.
All right, now for the wild stuff. Section 4, lawsuits, outages, and hiccups. Okay, you have to follow this timeline with me because it plays out like a literal movie plot. A filmmaker named Simon Afram spent 7 years and $45 million making an unreleased Nicolas Cage espionage thriller called Fortitude. In June, an associate producer dropped a digital copy of the movie off at Netflix's Hollywood offices for acquisition consideration. Just days later, Netflix went completely unresponsive, eventually admitting that the hard drive was literally stolen right off an office desk by an unknown thief. You can't make this up. And now, on July 30th, Afram filed a lawsuit against Netflix for a staggering $105 million.
Netflix, of course, disputes the claim entirely. Their argument is essentially, hey, we don't bear the risk for unsecured, non-industry standard deliveries. Basically, if you just casually drop a hard drive on a receptionist's desk without following actual security protocols, that is not their liability. Interestingly enough, as a quick aside, this isn't even the filmmaker's first lawsuit. He previously sued Martin Scorsese over this exact same film project. But regardless of how the courts rule on this, it remains a remarkably embarrassing security blooper for the world's leading entertainment company.
And the operational hiccups didn't stop there. On August 5th, the infrastructure literally broke. Over 65,000 outage reports flooded into down detectors starting around 1910 UTC. We saw 25% of the reports coming from the US, 25% from the UK, and 50% scattered across the rest of the world. Screens were completely paralyzed, apps were crashing. It dramatically exposed our massive, fragile reliance on this single platform for our global entertainment.
But surprisingly, and honestly kind of hilariously, while tens of thousands of users were facing server errors, Netflix's own official status page just blindly insisted that everything was perfectly fine. They displayed this message: "We are not currently experiencing an interruption to our streaming service." The service did eventually return to normal, but yeah, it was certainly not their best day for operational transparency.
To cap off the operational turbulence, we have to talk about their gaming division. In mid-August, Netflix drastically pulled back the reins on its in-house gaming ambitions. They closed down 2 of their game studios, Night School and Moonloot, and reportedly laid off roughly 85% of the staff at Refactor Games, which had actually been developing this massive FIFA World Cup-themed title. So instead of trying to build massive internal game studios from scratch, they are retreating and pivoting towards simpler, cloud-based TV games that fit way more naturally into their existing streaming ecosystem.
Let's pull the whole shebang together. Section 5, the battle for growth.
So the absolutely crucial takeaway here is that this balance sheet we've just built shows a company in massive transition. On one hand, you have serious operational turbulence, right? They're navigating a 40% stock drop, a highly embarrassing $105 million Nicolas Cage lawsuit, a global outage, and a pretty significant retreat from in-house gaming. But on the exact same token, you have these heavy, incredibly calculated investments. You have Bill Ackman's massive vote of confidence, booming ad revenues, a $500 million bet on AI that could revolutionize production, and strategic geographical pipelines in India. This is definitely not a company just resting on its laurels. It is actively, aggressively restructuring for its next phase of life.
So Netflix may have effectively won the streaming wars, leaving companies like Disney and HBO in the dust when it comes to sheer subscribers. But with this new battle for sustainable future growth really just beginning, the real question you have to take away from this explainer is this. Looking at the massive wins, the embarrassing losses, the bleeding-edge tech, and the operational turbulence, are you buying into their next act? Thanks for joining me on this deep dive, and as always, keep questioning the headlines.